We would like to greet you people in Singapore here on Economic Buzz, the English talk show program that outlook the economic issue for your business. You can also watch this program via live streaming on okzone.tv. We are still talking about time to trade with Monex, outlook and opportunities. We have Mr. Vicky Amarnani, market strategist from Monex Invest Indo Futures, and Mr. Joe Dinapoli, a professional trader, author, and also the godfather of Fibonacci. I believe many business viewers are wondering why I keep mentioning the word the godfather of Fibonacci, what we can learn actually from Mr. Joe Dinapoli. Earlier, Mr. Dinapoli already mentioned about the market condition. On Monex perspective, Mr. Amarnani, what can be shared with the business viewer? What's been happening lately?
Well, I mean, I would say after the 2008 global crisis, we are now in a market, or in a market where there is too much uncertainty, and therefore a lot of investors have had more of a trader approach now, because there's so much noise in the market, so much news that we cannot predict what's going to happen in the future, that people tend to take a more short-term approach in the market. And as much as worried we are, we have to get our money to work. We have to find, an income. So the sad fact is that we have to live with it. That's why, I mean, by having experts like Mr. Joe Dinapoli, we can learn the right timing to get into the market. That's the most important thing. I mean, eventually if a price rises, but it depends how much it brings you down before it goes up. That's a big cause as well in an online trading futures market as well.
Mr. Joe Dinapoli, from the global perspective, when we talk about the right timing in trading, what kind of measurement can we use actually in knowing this is the best time or this is time to hold? Because I believe it won't come that easy, right? Just like that, I will say this is the best time, this is it.
Well, I've noticed a change, and the change came in late 2012. And it's by accident, but it's a very fortunate accident that I'm here at this particular time. Because markets gave a signal in very late 2012 that things were coming back to normal. Now, if you look at the economic situation around the world, you want to kill yourself. I mean, I mean, it literally looks terrible. But what most people don't understand is we don't trade the economy. We trade the markets. And the economy and the markets are not the same thing. In fact, a good part of my presentation tomorrow is going to be a dissertation on what people expect the markets are and what the markets actually are. And there's really a big divergence there. And in late 2012, I could see from watching the markets that we're coming very close to equity resurgence. And I posted this on my website early 2012. It's worked out very well. The signal is there that interest rates will begin to go up. And eventually, I think commodities will come back into play, but that'll be later in the cycle. I think things are looking up, actually, from the market perspective.
Very informative sharing, Mr. Dinapoli. Mr. Amarnani, how would you respond to Mr. Dinapoli's statement? Instead of trade the economy, we actually trade the market.
That's true. I mean, we can all day think about the euro breakup, the euro debt problem, slow growth in the U.S., slowing down the China economy, the three big economies. If they collapse, there's going to be a global crisis. But I think, like Mr. Joe Dinapoli mentioned, that the market's starting to look better because now we are aware that this is the current global situation. Interest rates will remain low for a fair bit of time, but eventually will rise. But with that support of the market is behaving in a better manner now. There's less panic with the 2011 Greece coming out of the Eurozone, Spanish problem, Italian yields rising. All those concerns are now subsidizing. So I think that's an optimistic way for the market to behave in a more normal manner.
Please.
Look, as human beings, we try to rationalize market movement with the economy. And they don't necessarily go together. I can give you myriad examples where they don't go together. Just let's talk about one that happened recently. We had this crisis in the U.S. with the debt ceiling just recently, where Congress was trying to make some fiscal cliff decision, and the markets were supposed to crash, and everybody was wringing their hands. Now, if you look at the stock index futures, which is one of my strongest markets, in fact, I've been trading stock index futures since the day they came out in 1982. If you look at the action, don't listen to what you hear about the news. But you look at the action of the markets were steadily gaining. They were not being intimidated by this news. At that time, I loaded the gills on stocks and on stock index futures. And that's just one example of how you trade a market. You don't necessarily trade the economy or what you hear. The most profitable trades that a trader will ever have are those trades where there's a divergence between what you believe will happen based on logic and what is actually happening in the markets. When you see that kind of divergence, that's the time you can make serious money, and you can make it quickly.
Okay, Mr. Vicky Amarnani, you mentioned about how to lessen actually the way we over-worried about the current economic situation. What, in quote-unquote, panic attack are commonly found earlier when we talk about how the economic situation could influence the market?
Correct, but I mean, as I mentioned, that the interest rates are low. In the U.S., the interest rate now is 0.25%. If I had $1 million, I wouldn't invest my money into U.S. deposits where I would get 0.25% per year after cutting tax 0.1%. No point. That's why investors are looking into the market. I mean, we've had a good strong rally of about 5 to 7% this year. We have had a 16% rally globally in equities last year, and I think this will carry on. And people will continue to invest into blue chip stocks because they know that these companies will be there in the coming 10 years. The stock value will be higher, and meanwhile they'll be getting dividends of 2.5 to 3% with AAA companies. So why would people invest in deposits? So I think the dollar would weaken, and this would support commodity markets, equity markets, property markets, even though there's so much uncertainty in the market. But there will be points where panic attacks will come, and the dollar will strengthen. These markets will take a correction. But overall, I see a weaker dollar.
All right, gentlemen, we are going to continue after this one. And more on the discussion about time to trade with Monex, outlook and opportunity will be brought to you soon. Stay with us on Economic Buzz.